Just a quick video to update on what's been going on with the market and things. This is just a general advice warning, so please note that anything in this doesn't contain any advice specific to any person, and no consideration has been made in regards to that. First, I'll just look at ANZ quickly. This is just a stock that I've mentioned in the newsletter. I just thought I'd show what I did there, basically, and how I sort of constructed it. So ANZ broken out of this channel down here prior, this big rundown back in August, September, broken out. Obviously this was the dividend here, this ex-div, and it dropped back down. Basically it had come down and sort of retested this zone of previous support at $19, and I mean this trend line based off there, retesting that. If you look at it on a weekly, same sort of thing, you can see that it's held $19 quite well previously, so that was an area of looking to buy the stock. People that have bought, basically buying under there and trade it sort of up. I'll show you first back to the sort of the moving averages. The other thing was this range that had been completed. Now this is a previous range that ANZ seems to complete quite often. Back then, during March 2009, 10, and there was another one back through here. Basically, we'd done that and just looked overextended. So to catch a falling knife, so to speak, if you entered just under 18, stops below the lows, you're up about 5% at the moment as of close today. So not a bad little stock to trade sometimes, ANZ. And just looking at the market, same sort of thing. We'd come down exceptionally far at area of support around the 4,000 level, which is also quite a psychological level, and as you can see, we've bounced quite nicely off that. So where to next? It's a hard one, and here's a previous short-term resistance for 1 to 2. People will probably, you could potentially find resistance there, and you're coming into this moving average again, so anywhere around here you'd be thinking you might find a bit of short-term problems. However, if you look at it on a larger scale, you can probably argue that we might just go sideways for a while. On a weekly chart, basically you can just see it maybe just making a basing pattern around here into sort of early to mid 2012, which is sort of when my dates align, and I think that the market could potentially rally strongly from there. That's my thoughts sort of early next year, and as I did with the newsletter, the yearly chart, if you look at it, basically we haven't had 2 years of red in a row, so this year's looking like the first 2 red candles since 82. So I'd say the long term of that is we're on a long-term trend line, as you can see through here. Basically the market's sort of focused on that sort of direction of growth. As you can see, we went well out of that during 02 to about 2007, and fell down, basically claimed back those 4 years just in the year of 2008. So now that we've toddled along sideways here, I'd say we'll probably you'll see another sort of candle, just another growth sort of thing, reclaiming this this trend line. If we go probably slower, normal world growth for a while, and before we can get any sort of decent moves out, is sort of what I'd look at doing. But yeah, that's about it for this video.